Namaste, good morning. Welcome to this session where our objective is to understand transfer pricing, okay, to a larger extent. Out of the 30 marks of international taxation, my intention is to make you score 25 plus. Okay, how far it is going to be possible and what needs to be done, let us leave it to God, and I am very optimistic that we will be able to score that magic mark anywhere between 20 to 25 in our transfer pricing or in our international taxation arena. We start the classes with international taxation for the next 5 days. My objective is to complete at length and breadth the international taxation if possible. If we can save some time, then it will be helpful for us in the future. But the theory and the questions are there in the material itself. So your role is to answer the questions, is to be do along with me the questions, and wherever possible to do to what I would say, to do the homeworks, etc. Let me tell you, okay, right? We start with international taxation, that is transfer pricing. If we look at our transfer pricing syllabus, our syllabus covers majorly section 92 followed by 286, that is country by country reporting. I am going to go in the same fashion. The classroom is going to go in the same fashion in which the law travels. Let us complete all the parts of section 92. Starting from 92 to 92E, let us complete that. Whatever circular relevant there, whatever provisions are relevant there, we will complete it. And then go forward and understand what is section 286 saying about it. So that 286 will lead us to non-resident taxation in a very good manner. 286 will lead us to the non-resident taxation in an interesting manner. So my focus now is going to be on starting from section 92 or complete 92 in our own style. We all know about section 40A subsection 2 to a little extent. Section 40A subsection 2 tells us any payment to a relative should be at fair market value. Where the payment to a relative is in excess of fair market value, that excess should be disallowed. That is what section 40A subsection 2 tells us. Now, we are giving a very different dimension to section 40A subsection 2 and putting terms or jargons in a different manner. How? Instead of the word relative, I am going to use the word associated enterprise. Instead of the words any payment, I am going to use the word international transaction. Instead of the word fair market value, I am going to use the word arm's length price. So, a domestic provision which we are very comfortable with, a provision which we know to a little extent, which is lucid to understand, I can make it in a grandeur manner to look at it in a very different perspective. That is what transfer pricing does. Internationally, we are having a problem of base erosion by profit shifting. base erosion, that is, people or companies are trying to shift the profits from a highly taxed countries or where the tax rate are high to countries where the tax rates are low or the tax rates are sometimes zero also. This is not a problem of our country, my dear friends. It is international problem. That is why OECD, Economic Cooperation and Development, are developing models to counter this. This is the problem US faces, Germany faces, UK faces, France faces, Singapore faces, Australia faces, India faces. Because these are all the countries where the tax rate is believed to be higher. And every country has a nearby tax haven, be it Mauritius, be it Colan Island, be it Dubai, be it Ireland. Every country has a country, every segment has a country near them which is considered as a tax haven. So many companies are trying to shift profit from a taxed nation to a tax haven so that they are able to save on the overall profit, overall taxation. So countries has to preserve their revenue. That is the bottom line. Every country has the right to protect their revenue. This is the bottom line with which it all started. Any income and the material, wherever it is in a different color, if it is blue, it is amendment. If it is maroon, it is explanatory or important. Wherever there is a highlight, very few places only, okay, something more to be understood. That's what is the pattern of the material. Any income arising from an international transaction with an associated enterprises should be computed at arm's length price. Repeating, any income from an international transaction with an AE, associated enterprise, should be computed at arm's length price. So suppose if it is not at arm's length price, what happens? Okay, suppose if it is not at arm's length price, AO, assessing officer, will make the adjustment, and the interesting words the law is using, okay, is the interesting words that the law is using is make adjustment to increase the income of the assessee. The interesting words is adjustment can only be revenue friendly. Adjustment cannot favor the assessee. Okay, in no way transfer pricing regulation. Suppose, okay, in one of the questions also we will understand that more clearly. Suppose if the adjustment results in decrease of price, suppose if the adjustment results in decrease in the ALP, then the TP will be dropped. The assessment will be dropped. Okay, a similar provision we will study in section 144, best judgment assessment, 147, reassessment. All these things can only be revenue friendly. It cannot be assessee friendly, in the sense the result cannot be benefiting the assessee. So the law by itself says, where by applying the provision it benefits the assessee, drop the proceedings. Okay, drop the proceedings. So the words is such adjustment to increase the income of the assessee. It can only increase the income of the assessee. It cannot reduce, or it cannot have a friendly provision of assessee. And when I say an international transaction, because we normally tend to understand that this is applicable for sale of goods or provision of services. No, it also includes cost and expenses. Okay, why do you think that the sale value should be understated? Even the purchase value might be overstated, which results in profit being less. So it can also be on the other side, that is cost and expenses. Okay, so it cannot result in reducing of the income or increasing of the loss. So we understand this as it should be a revenue friendly provision only. It should be a revenue friendly provision only. Okay, so section 92. Remember, I am traveling from 92 to 92E. 92 is the base provision which tells us all these things. My dear friends, one of the factors which we will discuss later in 92, but I want to bring it here itself, is AO shall make such adjustment. If you want to communicate to me anything, you just text me. I will ensure that once in half an hour, I'll just see it, okay, but otherwise, I don't want the flow to stop, and the time should be best utilized. Please communicate to me, okay. So no, I don't see anything. So please communicate to me only by texting, no, nothing else. Okay, right. And please stop using the chat box. Please stop using the chat box. Okay, I really mean it. It disturbs if you use the chat box. Anything, communicate to me only by texting, and I will assure to come back to you with the after half an hour, 45 minutes, etc. Coming back. Okay, so it can only result in benefiting the assessee. Okay, right. Later in our study, we are going to also say where the assessing officer increases the income. Please understand, where the assessing officer has increased the income, then where the assessing officer has increased the income, then assessing cannot claim any benefit. Like if he is already having section 10 AA benefit, he is the assessee is an export oriented unit located in a special economic zone, or the assessee is having some 80I deduction or some expenditure, nothing can be claimed. Where AO increases the income, then assessee cannot claim any benefit. Not only that, the provisions of penalty will also be applicable. That is, penalty in the nature of underreporting or misreporting of income will also be applicable. So please understand that AO has the power to increase the income, and assessee does not have the option of claiming any benefit against such increased income. This is the base rule, just the base rule of 92. Well, we need to understand all these terminologies: international taxation transaction, associated enterprises, arm's length price, to progress or to understand this. What is an associated enterprise? How do I say that one enterprise is having association or coordination with the other enterprise, and there is a possibility that profits might be shifted? There are only few aspects, and the fundamental aspect is control and management. The fundamental aspect, even in section 40A subsection 2, if you look at it, payment to relative, it talks about these things only. Subsidiary companies, firms in which directors are partners, company in which partners are directors. Okay, substantial interest holder. So the terminology is control and management, be it there or here. Look at the wordings. The term associated enterprise is an enterprise participates directly or indirectly. Indirectly means through my associate, through my subsidiary, I am trying to control. Directly or indirectly, through one or more intermediaries in the management of other enterprise, in the control of other enterprise, or I contribute the major capital of the other enterprise. Once more, an enterprise which participates directly or indirectly through me or one or more subsidiaries in the management of your company or in the control of your company, or your company's capital structure is largely dependent on me. So this is speaking about an enterprise. What if one person, not an enterprise, a proprietor, a person controlling more than one enterprise, that is also covered. If one or more persons, let they not be enterprise, okay, brothers, control the region. If one or more enterprise, one or more persons participate either directly or indirectly in the management, control and capital. So it can be an enterprise or it can be person, okay, which control the other, which manages the other, or which contributes capital. What is the advantage of contributing capital? The advantage is you get the interest, you get the controlling power. Okay, so all these things, I might not be the board of director, but I am holding 90% shares of that company. I'm not the board of that, but it means that I am controlling the company to a larger extent. So this is associated enterprise, and the law does not stop here. The law gives us a list of things which can be considered as associated enterprise. Listen please. Okay, the law gives us the list of things which can be considered as associated enterprise. 26% or more of the voting power. 26% or more of the voting power. Either I can have in another company or another company can have on me. Or there is a common person who has both on me and on another person. Understand? Mr. X is having more than 26% in A Limited and B Limited. A Limited and B Limited are also associated enterprise because it is controlled by a person, one or more person, directly or indirectly. So, on the basis of voting power, we are having you can easily remember our company law which says what is a special resolution, etc., and where the controlling interest 75% plus, so 76, so 26%. If I hold, the other one gets down to 74%. Any special resolution, my participation becomes essential, okay, in an indirect manner to understand. Second, capital. 51% of the assets that the company holds are funded by me. 51% of the assets that the other company holds are funded by me. That means I might not be the director, I might not, but I have the right to control the other company. Third, 10% of your loans are guaranteed by me. then also there is a possibility. Half of the board of directors, management committee members, managers, chief executive officer, I will relate it tomorrow when we read the poem concept, place of effective management. Sometimes board of directors are the commanding head. Few times board of directors just give the authority to a body, governing body, or to a committee, or to the CEO. Then board of directors is not the main person who is taking decisions. The other one is the main person who is taking decisions. So more than half of the directors or members of the governing body, because director is not the BOD is not the main decision making. I will connect and show you tomorrow. Or one or more of the executive director or executive member of the governing body of one enterprise is appointed by other enterprise to become the director, managing director, board of directors of Maruti Limited, or only with the approval of Suzuki, Japan. Controlling. Or not by wherever you see that it is coming as an enterprise, the next condition will also be a person who is controlling. More than half of the directors or members or governing body of one or more executive directors or member of each of the two enterprises are appointed by the same person. Then also we have it. So what are all the first 6 things? 1, voting power, the first 2 things. Second 2 things on the basis of balance sheet. That is 51% of the asset is funded by one other enterprise. Then on the basis of guarantee 10%. Then the next 2 conditions 5 and 6 is based upon control and management. More than half of the board of directors of one company is appointed by another company. More than half of the governing body is appointed by another company. Then they both become associated enterprise. They both become associated enterprise. Then comes the business aspect of it. What is meant by business aspect of it? My dear friends, please understand. The manufacture or production of goods by one enterprise, is wholly dependent on know-how, patent, trademark, copyright, document, data, license, franchise, of which the other enterprise is the exclusive owner. Hyundai manufactures car in Chennai, but the know-how, the trademark, the patent belongs elsewhere. Saint-Gobain glasses manufactures. Many Coca-Cola manufactures, but the trademark Coke belongs to US Coca-Cola Incorporation. So the trademark, patent, document, etc. The back officers here process data for an insurance company which is there in US. Who is the owner of the document? The US company. The owner of the document is the US company. Okay? And I am just processing the data sitting in OMR. I am just processing the data, okay, sitting in Delhi, Gurgaon. Okay? So the owner of the exclusive owner of which the other enterprise is the owner. I am not the owner. The other enterprise is the owner. We are becoming associated enterprise. I am just telling you what is an associate enterprise. First, we are telling the terms. Then we will see whether how this ALP is going to work upon. How this ALP is going to work upon, we will see. Right. Friends. Next two conditions, there is something very important you have to understand. The next one is with regard to raw material purchase of goods. Okay, it is purchase of goods. 90% of the raw material or consumable, if I purchase from one person or on the directions of one person, we both become associate is a preliminary understanding, but that is not the complete understanding. I will tell you, please understand where you have to be cautious. Prices and other conditions relating to the supply or influence. Just because 90% of raw materials and consumables are purchased from one party, they don't become associate enterprise. That is a trigger point. But what is the surety they become associate enterprises? Prices and other conditions. What is the danger level? What is the reorder level? When you have to buy, at what quantities you have to buy, and then at what price you have to buy. If these are influenced only, then they become associate enterprise. So it is a combination of condition. One, it should be 90% or more of the raw material or consumable stores purchased from another enterprise or from a person who has been nominated by the other enterprise. Not only that, and the prices are influenced by the other enterprise. This is supplier based. Next is customer based. The next is customer based, where I am having a single customer and the prices are influenced. Okay, in both these cases, in H and I, what is important is not just the quantum of supply or quantum of delivery, it is also that the prices are influenced by the other person. It is also that prices are influenced by the other person. Okay, then comes individual, HUF, firm, residuary condition. Individual, where one enterprise is controlled by an individual, other enterprise is controlled by the same individual or is relative or jointly by many people in the family, they become associate enterprise. One enterprise is controlled by a HUF and the other controlled by relatives of the HUF or the HUF or the members of the HUF. Okay, we will see that an Indian entity is a HUF. Two of the members of the HUF has a foreign company also, from where they are outsourcing the work to the Indian HUF. Mr. A and Mr. B, members of the HUF, are now in US. They are running a company and they are outsourcing the work to the HUF. So they become associated enterprise. Okay, and with regard to firm AOP BOI, that point you have to remember is not 51%, it is just 10%. It is not 51%, even if there is a 10% interest. Okay, not even our substantial interest holder of 20%. If there is a 10% interest, then they become associate enterprises. And the last point is residuary, is for the authorities to determine. So can we quickly conclude what is an associate enterprise? An associated enterprise is like this. First two condition based upon voting power, that is 26%, okay, held by another enterprise or one person holding in two different enterprises, they also become. Next two, on the basis of balance sheet, 51% of the assets are funded by a company or 10% of the loan is guaranteed by another person, they become associate. Next two, control and management, half of the board of directors, governing body members, executive officers of one enterprise is appointed by another enterprise, or of two enterprises appointed by a person. They all become associate. The seventh condition is based upon business, know-how, patent, trademark, copyright, document, data of which the other enterprise is the exclusive owner and I'm just using it, we become associated enterprise. We become associated enterprise. Then supplier based, where quantum is 90%, price should be influenced. Customer based, entire quantity, price should be influenced. Individual, HUF, firm AOP BOI and residuary condition. This makes the other enterprise associate. So, in a generic question of transfer pricing, the first thing we have to write is they are associated because of this reason. Okay, in our examination, state the obvious is the rule. Always state the obvious. If you look at our suggested answers, our institute material solutions, everything will write something which you very much know. You will wonder why I should write. There is only one reason why you should write marks. Okay, so please state the obvious. Okay, payment made for advertisement 25,000 on a single day by cash. Disallowance under 40A3, 25,000 is not sufficient in our examination. According to section 40A subsection 3, any payment in excess of rupees 10,000 on a single day to a particular person in an unapproved mode shall be wholly disallowed. In this case, 25,000 is paid on a single day. Hence, it is disallowed. You should add back 25,000. In examination, sir, whether I will have time, you will have time, you can plan that, but state the obvious is the rule in the examination. So in a transfer pricing question, our answer will start by saying why they are associated. Because they are having 26% voting, because the question will be framed, such and such company having such and such things. Okay, so the question will be framed. So start your answer by clearly mentioning why they are associated enterprise. Then comes what is meant by international transaction. Before going, let me be very clear. International transaction means at least one of the parties should be outside India, or both the parties can be outside India. Shall I repeat? One of them should be a non-resident. Otherwise, I will not. Otherwise, the topic of our entire coverage is international taxation. At least one of them should be, one of the transacting party should be a non-resident, or there can be a possibility both of them non-resident. We will come at last to specify domestic transaction. That is not very important, both from the examination perspective and at present understanding perspective. Okay, but I will touch upon. Okay, so what is international transaction? One of the transacting party, at least one of them is non-resident, or sometimes PE is in India, two non-resident transacts which has an impact in India, then it is known as an international transaction. It is known as, so one of the transacting party or both the transacting party are outside India, it is known as an international transaction. And it will include purchase, sale of goods, assets, services, capital financing, that is borrowing, share capital, business restructuring, and trust me, final points is allocation and apportionment of expenses or cost. And the last point sums up everything. Any transaction, the word other you can ignore and look into it. Any transaction which have a bearing on the profit, income, loss, assets of such enterprise. In fact, A, B, C, D, E are clubbed with F actually, because F is more clear. If one transaction will have an impact on the profit, income, cost, etc. of another enterprise, then they become international transaction. Then they become a transaction, and if it is with a non-resident, international transaction, where it needs to be coming under TP network. It needs to be coming under TP. So, purchase, sale, lease of tangible or intangible property, capital financing, full of loans, advances, deferred payments, etc. Provision of service, business restructurings like demerger, amalgamations, etc. Allocation of expenses, any other transaction which have a bearing on all these things is considered as international transaction. Okay, and then comes a small concept called deemed international transaction. Then comes a small concept called deemed international transaction. Understand this circumstance. Okay, imagine in your mind this circumstance. A Limited, a Indian company, transacted with B Limited. A Limited, a Indian company, transacted with B Limited, another Indian company. Is it coming under transfer pricing international transaction network? No, A Limited and B Limited are Indian companies. It will come under 40A2. Maximum stretch is specified domestic transaction. Otherwise, it is coming under 40A subsection 2. But A Limited transacts with B Limited saying that B Limited should transfer the goods or services to C Incorporation, a foreign company. Once more, A Limited sells goods or provides services to B Limited, another Indian company, with a condition that B Limited in turn should transact that to C Incorporation, a foreign company. B Limited and C Incorporation are not associated. B Limited and C Incorporation are not associated. So no TP. Shall we again repeat? A Limited, B Limited. No TP because both are domestic companies. Maximum specified can come, but generally no TP. B Limited, C Incorporation. No TP because they are not associated enterprise. But I understand in one way, A Limited and C Incorporation are associated enterprise. What is that? Me and the ultimate beneficiary are associated enterprise. But the in between B Limited, I am just using it to avoid coming under TP regulations. I am trying to use this B Limited as a channel to avoid coming into TP regulations. A sold to B, not an international transaction. No, not an international transaction. So no question of TP. B to C Incorporation, though it is an international transaction, but it is not with an associate enterprise, no TP. But A and C Incorporation are associate. So came a concept called deemed international transaction. So came a concept called deemed international transaction. A Limited and C Incorporation are associated enterprises, So the transaction between A and B will be deemed to be international transaction. Will be deemed to be an international transaction. Are we clear? The transaction between A and C only, or A and C are only associated. They are not directly transacting party. They are trying to use a person called B in between. Transaction is first entered with a domestic assessee. There pre-exists a contract between the other person and the AE, and the substance of such other transaction. So what happens? This first transaction between A and B Limited will be treated as a deemed international transaction. For all of us in the classroom, if you can draw a small diagram in your notebook, okay, leaving top few lines, the diagram should be A Limited sells to B Limited. Under that, no TP as it is domestic companies. B Limited to C Incorporation, no TP as they are not AE. A to C. A to C. Are associated enterprise. A to C are associate. A to B, no TP. B to C, no TP. But when I look into it, A to C are associated file. Therefore, transaction between A and B Limited, you will wonder why it is. Sir, it is not an international transaction, sir. It is between two domestic parties. That is why I am using a term called deemed, supposed to be. Lifting or piercing of corporate veil. I will only consider this B Limited. I will suppress them and see it is A to C directly. So the transaction between A Limited and B Limited will be treated as international transaction. So deemed international transaction. Up to this stage, I have covered the following. Base rule 92. Associated enterprises 92A. 92B international transaction. 92B subsection 2 deemed international transaction. Okay, deemed international transaction. Okay, never you should touch your material of solution. Okay, that is not going to be used in the classroom at all. That is only wherever there is a small referencer or for homework. Okay, now question number 1, I'm in page number 29, I believe. Okay, or it should be 28, whatever is the page number. Question number 1. Okay, and if you are using it in your iPad or laptop, or it is hyperlinked, so you can directly go to it. State whether the following transaction attract TP regulation. Okay, 1. Beer Limited Delhi has 12 directors, out of which 7 directors are appointed by Lion Trade South Africa of France, Lion Trade SA of France, along with its subsidiary located in Europe, okay, US and Europe. Okay, friends, before I'll also tell you, if you want, I will share this Excel sheets also with you. Okay, this Excel sheet will consist of theory solutions. You will find it. practical, and if at all there is general theory which I am answering in the classroom, writing something in the classroom, for that I have kept it. Okay, so question number 1. Okay, case A. Okay, please understand, if half or more of the directors of one company is appointed by another company, okay, then they become associated enterprise. Okay, this is the base rule. If half or more of the directors of one company or governing body, etc., is appointed either directly or indirectly by another company, then they become associated. Okay, in the given case, okay, 7 out of the 12 directors of Bear Limited is appointed either directly or indirectly by Lion Trade SA. Okay, hence they become associated enterprise. Hence they become associated enterprise. Okay, if half or more of the directors of one company, okay, or the managing committee, governing body of one company is appointed by another company, they become associated enterprise. They become associated. PEF LLP UK holds 28% voting power, holds 28% voting power in PQR Limited, Kolkata. Okay, though there were transaction exceeding between them, okay, that's not a problem. Are they associated is the question. Okay, where one enterprise holds 26% or more of the capital of voting power, another enterprise, then they become associated enterprise. Okay, where one enterprise holds 26% or more of the voting power of another enterprise, then they both become associate enterprise. I need not complete the answer. In this case, you all know, in the given case, 28% is held by TFLLP. Hence, they become associated enterprise. Okay, okay, right. Resale Limited, Chennai, exports semi-finished goods to its subsidiary Tom Company Limited of Colombo. The subsidiary completes the process and after packing them, dispatches back to DC Limited. During the financial year 2021, the total value of goods dispatched by DC was 3 crores and processing charges was 50 lakhs. I need not go up to this level and study, though I always read the question. DC Limited, Chennai, exports semi-finished goods to its subsidiary company, Tom Company Limited. Subsidiary means more than 50% of the share capital. It can be at least 50.1. Okay, more than 50% of the share capital held only is known as a subsidiary. So, if 26% or more is held, then they become associated enterprise. Okay, right? The Colombo company is a subsidiary, which means more than 50% of voting power is held by the Indian company. Hence, they are associated enterprise. Hence, they are associated enterprise. To satisfy that condition, what I need is 26% or more, which is obviously being held. So they become associated enterprise. Karun HUF consists of Karun, two sons and a daughter. It is carrying on business at Kanpur. Both the sons are in USA, owning share capital exceeding 50% in two companies. The HUF purchased the raw material in India and exported the same to USA. So they are associated enterprise. Okay, with regard to it, one is a HUF. The members are having controlling interest on the other. The members are having controlling interest on the other. Okay, where HUF, where is owning an enterprise and the members of the HUF, where HUF is owning an enterprise and the members of the HUF. Okay, please remember the members of the HUF are, okay, the major shareholders, which means controlling interest in another enterprise. Then both these enterprise shall be treated as AE. Both these enterprise shall be treated as associated enterprise. Okay, where one is owned by the HUF or HUF by itself is a business entity and the members are owning or having controlling interest on the other, then obviously they become associated enterprise. Question number 2. Goods are sold by N& Co, a firm based in Singapore. N& Co is a partner in this firm with 8% share. They are not associated enterprise. They are not associated enterprise. Why? Because for a firm, 10% is the, okay, where in the case of firm, at least 10% should be held by another enterprise or by a common person. In the given case, only 8% is held, hence not an AE. Not an exact words, don't you can write in your notebook how you understand. In the examination, write the rule and then write it. If at all there is a question, write the rule and write it. Okay, okay, you need not copy down the exact answer. This Excel sheet will be with you. There is already a sheet of answers with you. Okay, but this is just, but in the exam, but in the notebook you are solving, you write it in your own words and just keep it marked. Okay, whether it is a. There are eight directors in N Incorporation, a company in USA. R Limited holds enough clout to appoint 5 directors. Okay, are they associated? Yes. Will your answer change if only 3 directors can be associated? Yes, my answer will change. Even if the question has asked, will your answer change if only 4 directors can be associated? Yes, because the wordings are more than half. More than half. Even if I can appoint 4 directors of the other company, my answer will change. It is not an associate. Okay, more than half only it becomes an associate. More than half only it becomes an associate. Okay. In the given case, 5 out of the 8 directors of the US company is appointed by R Limited. Hence, they are AE. Part B. However, where only 3 directors can be appointed, they are not AE, okay, because it is not having the controlling right. It is not having the controlling right. Am I clear to you, my dear friends? Okay, right. Question number 3. The top management of a multinational group of companies in the context of forming a global policy, okay, tax planning strategy, wants to know whether transfer pricing provisions under the Income Tax Act will be attracted in the following cases. Provision of scientific research services by a foreign company to its Indian subsidiary. So one side we are very sure that it is having a direct link more than 26%. Provision of scientific research services. Scientific research services have a direct bearing on the profits, because section 35 of our law says 100% of the expenditure will be allowed even if it is a capital expenditure other than cost of land. 100% of the expenditure will be allowed even if it is a capital expenditure other than cost of land. Going by that terminology, and generally scientific research expenditure will have a direct bearing on the profits of the other company. Hence, it will have its impact. It is coming under TP regulation. One, it is a subsidiary, so it becomes an associate enterprise, and TP regulations will also apply because it is a service which has a direct bearing on the profits. Okay, I'll write both the answer together. Lease of equipment by K Limited, an Indian company, from T Incorporation, a Singapore company. T Incorporation is a specified foreign company according to section 115 BBD. For those who are not knowing what is 115 BBD, I assure that at the time of reading our assessment of companies, we will read it again. But to understand it, if an Indian company holds 26% or more of the share capital of a foreign company, then that foreign company becomes a specified foreign company. Once more, if the Indian company holds 26% or more of the share capital of a foreign company, voting power of the foreign company, then that foreign company becomes my specified foreign company. The dividends are taxable at a nominal rate of 15%. The dividend received from a specified foreign company is taxed at the rate of 15%. So, coming to transfer pricing regulation, I am holding, when the question says it is a specified foreign company, it indicates that I am holding 26% or more. It indicates that I am holding 26% or more. Now let us see what is the transaction. Lease of equipment. Lease of equipment. It directly comes. Purchase, sale or lease of tangible or intangible property. It is directly mentioned also. Even if it is directly not mentioned, if lease payments are there, it will have a bearing on the profit, income or loss. That's why I said A, B, C, D, E will be subsumed into F itself. Will be subsumed into F itself. So, in both the cases, in this question, in both the cases, TP regulations apply. In both the cases, TP regulations apply. Okay, the other enterprise is a subsidiary, hence they are associated enterprise. Scientific research expenditure is having a direct impact on the profit or expenses or income. Hence, it is falling under TP regulations. In other words, you have to maintain the documents, you have to maintain what methodology you are applying. We'll see that. Okay, and you need to present it. Okay, part B of the question, lease of account. Okay, I will write it here so that our friends who are not familiar with the specified foreign company also understand. Specified foreign company means domestic company is holding 26% or more of the voting rights in such foreign company. So, if I hold 26% or more of the voting right with a foreign company, that foreign company becomes a specified foreign company. Okay, by satisfying this, they also become associated enterprise. These payments are directly mentioned in section 92B. Hence, TP regulations apply. Okay, TP regulations apply because it is directly mentioned. So you need to follow the TP regulations in this particular case. Okay, okay. What have we so far seen? We now know what is the base rule YPP. We know what is an associate enterprise. We also understand, okay, the international transaction. How do I classify a particular transaction as international transaction? So, if it is an associate enterprise having an international transaction, then it should be at arm's length price. Our next level of discussion goes to section 92C. I will come back to 92BA, okay, about specified domestic transaction. Okay, I will come back to that at the end. Though in the material I have gone section wise for one reason, that I don't forget to include something, but I will come back to specified domestic transaction later. Okay, we understood associated enterprise. Any international transaction with an associated enterprise should be at arm's length price, and that is where I am going and starting our discussion. What is meant by arm's length price? How do we compute that arm's length price to check whether it is at ALP or not? That is what we are now going and understanding. There are 5 methods of determining ALP, arm's length price. Okay, arm's length price. Generally, I don't wish to waste your time in a fast track batch. In a regular batch, I can go on explaining about the various terminologies, why it came. Generally, I don't wish to waste your time, but a quick look at why the term arm's length price. Okay, my dear friends, these are UK based. These type of concepts we are getting from UK or the English style. Okay, in English style, please understand, if I already know a person, I go close to him and speak. If I already know a person, okay, my friend Saurav, I already know him, I go closer to him and speak. If I already don't know a person, in English style, they maintain a distance. And they just say hello by extending their hands. They just say hello. If I don't know a person, nothing will influence me. If I know a person, there will be some influence. If I don't know a person, nothing will influence me. Prices should be between associated enterprise as if they don't know each other. The transaction between associated enterprises should be such that arm's length, as if you don't know. When you don't know, in English culture, they just extend their hands and shake. That's all. They don't go closer. They don't have influence. So prices between them should be at arm's length. This is an English coinage of term. Not only here, throughout you will see safe harbor. Okay, like that there are terminologies, poem, there are terminologies which are more of English style of living. Okay, arm's length price, as if you don't know the other person. If that other person is not your associated enterprise, he doesn't influence you, what price you would have charged? Charge the same price for AE also. So arm's length means the mode of computing the price, the transaction value, the mode of computing, and there are 5 popular methods. Comparable, uncontrolled price method, resale price method, cost plus method, profit split method, transaction net margin method. Such other method which are prescribed by the board. Residuary, let us leave it. Let us leave the residuary. The 4th method is not very popular in India, profit split method. It is not at all popular in our country. Okay, that is because of the OECD in Europe is a single aspect where multiple countries have joined together. Germany, France, like our railway stations, countries will go, Netherlands, Belgium. So they have this profit split method which is very popular over there. It is not yet getting popular here. So if you look at it, comparable, uncontrolled price method, resale price method, cost plus method, transaction net margin method. These are only popular here, though we will, for namesake, read a small note about profit split method also. These are all the ways by which arm's length price has to be determined. Arm's length price has to be determined. I start with the most simplest, and this method is going to be there continuing. Comparable, uncontrolled price method. As I told you, one who is not influenced is known as uncontrolled. One who is influenced is known as controlled. Repeat with me. One who is not influenced is known as uncontrolled. One who is influenced is known as controlled. So, a person with whom I don't have any influence, neither he influences me nor I influence him, I will transact. Boss, this is the price. If you want, take it or leave it. That price should prevail for the person who is uncontrolled also, who is having influence also. I transacted with Mr. X, who is an independent party. I sold him for 1 lakh. But for Mr. Y, in some way he is my associated enterprise. We saw the list of associated. To him I am charging lesser. He is influencing me or I am influencing him. The cost of this influence is for the country as such. Because profit is less, tax is less. The influence of you two cannot affect the revenue, cannot affect the exchequer, cannot result in shifting profits. So the law says comparable, uncontrolled price method. On one person you don't have influence, no. Use that price for the other person also with whom you have influence. Comparable. Both these transactions are comparable. I am selling iron to him, I am selling cement to him. They are not comparable. Comparable, uncontrolled between me and the X. There is no influence. Use that for Mr. Y also. Use that for Mr. Y also. However, functional differences can be there. What is functional differences? Differences arising due to various components. He is placing large orders. I am giving him some benefit, not giving him some benefit. Those type of functional differences can be adjusted to find out the price. Okay. Comparable, uncontrolled price method. Okay. Where transaction takes place between an uncontrolled person with a person with whom I don't have any influence or he doesn't have any influence with me, and with the person who's an independent party. Okay, in that case I should be really, if it is possible, I should apply the same price after making some functional differences. Okay, let us understand this with an example question. Question number 4. Sony Japan and Softtech Limited are associated enterprise. Fortunately, the question starts by saying they are associated. Suppose if the question has started, Sony Japan owns 40% of Softtech Limited. You should write in your paper the first part. Since they are owning 26% or more, they both are associated. Remember, examination, the answer should be a proper flow. The examiner, it is not your knowledge, it is displaying of your knowledge that wins. Okay, so tell the examiner, boss, I know what you are asking. Even at a later stage, if you have made a small mistake, he would not have mind that, because your flow is proper. Okay, so remember that Sony Japan and Softtech Limited are associated enterprise. Softtech manufactures mobile phones and sell them to Sony Japan as well as LG Korea. So here that uncontrolled party is LG Korea. During the previous year, Softtech Limited supplied 1,20,000 mobiles to Sony Japan at 2,000 per phone and 20,000 mobiles to the uncontrolled party at 3,200. The transactions are subject to the following differences. Sales to Sony are on FOB, okay, freight on board. Whereas LG is insurance and freight I am bearing. Okay, the freight and insurance is 300 rupees. In Sony's case, they are bearing. In LG's case, I am bearing. So that 300 I should obviously be lesser. Sales to LG are at a free warranty of 1 year, whereas Sony does not have such warranty. The estimated cost of warranty is 350 per mobile. Sony always places large orders, and on a market scale, you understand that a quantity discount of rupees 50 needs to be passed on for such large orders. Compute the arm's length price and the amount of increase in income, if any, due to that arm's length price. Okay, you can call it as uncontrolled enterprise also. Price at which I am selling to them is 3,200. Price at which I am selling to LG Korea is 3,200. Less functional differences. Less functional differences. There might be some functional errors. What are all the functional errors? Cost of insurance and freight. Because this is charged to LG, but it is charged to Sony. So obviously Sony's price should be lesser. In the case of LG Korea, I am bearing the insurance and freight. In the case of Sony, they are bearing it. So this difference should be always there, which comes to 300 rupees per phone. Cost of warranty. Cost of warranty. What is cost of warranty? 350 rupees per mobile. Because in the case of LG, I am offering warranty. Whereas in the case of Sony, I am not giving that warranty. Discount. That is the bulk discount. 50 rupees. Okay, 50 rupees. So the functional difference is 700 rupees. Therefore, ALP. Therefore, ALP, which means the price that needs to be charged to AE, that is Sony Japan. Okay, the price that needs to be charged to Sony Japan is 2,500. The price that I should have charged to Sony Japan is 2,500. To an independent party, I am charging 3,200. I am making some functional differences. My ALP, which is nothing but fair market value, okay, should be at least 2,500. Actual price charged per mobile, okay, actual price charged per mobile is only 2,000. Actual price charged per mobile, okay, Japan, Sony Japan is only rupees 2,000. Therefore, difference in price, difference in price 2,500 minus 2,500. Okay, increase in income due to application of ALP. How many mobiles I have sold to Sony Japan? 1,20,000. 1,20,000 mobile phones. So my increase will be 6 crores. My increase will be 6 crores. Okay, my increase will be 6 crores. If I myself increase, fine. If I myself, I means assessee, or at the time of audit, the auditor points out because of which the assessee increases. Where such increase, please write this also in the examination, is made by AO, where such increase is made by AO, then assessee cannot claim any deduction or exemption against such increased income. Where such increase is made by assessing officer, assessee is not having the right to claim any expenditure, deduction, exemption against such increased income. Second note, if you want, you can write it is optional. I don't think it is essential, but you can add. Okay, it is assumed assessee has not entered into advanced pricing agreements. Okay, you can write it about APA. We will see as the class goes by, either today or tomorrow. We will see about APA. Okay, this is how the answer should be completed. Start from why they are associated enterprise. Okay, then come to the core answer. Say what is the income increase. Income increase can be suo motu, either by the assessee himself or by the AO. Where AO increases the income, there is a problem. I cannot claim any deductions. And end with a small note that it is assumed that assessee has not entered with APA. So you are covering a larger part of the transfer pricing to the examiner. He will also be happy to read your answer. He will be happy to read your answer. Yes Limited, an Indian company, supplied billets to its holding company G Limited, Germany. Here is where we should say they are associated enterprise to its holding company. So more than 50%. Yes Limited also supplied the same product to another German-based company, Z Limited, unrelated party. The transaction with G Limited are at 500 per metric ton FOB, whereas the transaction with Z Limited are 900 per metric ton CIF. Insurance and freight 300. Compute the arm's length price of the transaction. During the year, 10,000 metric tons were supplied by G Limited. What will be the effect of change in ALP on the profits of S Limited? Assume its export profit are covered under exemption under 10AA. Will there be any increase in the on the quantum of exemption with an exchange rate of €1 is equal to 90 rupees? Okay. On the second part, I will make a small mention here. For those of you who are not aware or who cannot recollect what is 10AA, don't worry, we will do it before doing AMT provisions. 10AA is for export profits, okay, of units located in special economic zone. It is being given, okay, export profit for units located in special economic zone. First 5 years, 100% of export profit can be claimed. 100% of export profit can be claimed. Next 5 years, only 50% of export profit can be claimed. Only 50% of export profit can be claimed. Okay, and the balance 5 year on the basis of reserves, don't worry about it. We are in the 7th year, 50%. Export profit means total profit into export turnover by total turnover, because total profit is for both domestic and export. Proportionately, what is export profit? We will do exclusive questions when we go to the domestic taxation. Okay, now this is 10AA, but the question here is, can they claim 10AA? Means no. Okay, let's start the answer from the beginning so that I'm able to tell you how to go about answering a question. Question number 5. Okay, okay. The question says, Yes Limited, an Indian company, supplied to its holding company. Yes Limited, the Indian company, is a subsidiary of G Limited, Germany. If 26% or more of the voting power is held by another enterprise, then they become, sorry if it is covering, then they become associated enterprise. Then they become associated enterprise. In the given case, S Limited and G Limited are associated enterprise. In the given case, S Limited and G Limited are associated enterprise. Fine. Okay, they both are associated enterprise. Now, computation of ALP. Computation of arm's length price. Okay, euro value of billets supplied to Z Limited and independent enterprise. Okay, you can even write uncontrolled enterprise. Euro value of billet supplied is 900 per metric ton. 900. Okay, less functional difference. Freight and insurance. 300. Freight and insurance. Insurance and freight is 300. Okay. Therefore, ALP. Therefore, ALP is 900 minus 300, 600. Therefore, ALP is arm's length price is 600. 600 per metric ton. Actual price charged to G Limited. Okay. Actual price charged to G Limited. Okay. Germany during the previous year. The transaction with G Limited are 500 per metric ton. Okay. Difference is 100 per metric ton. Difference is 100 per metric ton. INR of increase in income for 10,000 metric tons. Okay, INR value of, because last year I have supplied, okay, 10 during the year 10,000 metric tons are supplied to G Limited. So 10,000 into 100 into, in conversion is 90. Repeating, 10,000 into 100 into 90. My increase in income is 9 crores. My increase in income is 9 crores. Okay. Where assessee suo moto increases the income, where assessee suo moto increases the income, that I myself increase the income, then section 10AA exemption, then section 10AA exemption can be claimed at 50% of export profit. Since it's 7th year, you will understand this. Suppose if you don't understand it here, don't worry, you will understand it when we do 10AA. Okay, 50% of the export profit will be claimed. Okay, where AO increases the ALP or the income, then assessee cannot claim exemption under section 10AA. Where AO increases the ALP, the problem is assessee cannot claim exemption under section 10AA. Assessee cannot claim exemption under section 10AA. That is the problem if AO increases the income. So, of course, the last point is it is not due to APA. The question itself is clear. It is more to do with the exemption and not APA. So I'm not writing it, but in exam you can always add as a last point as a small note, which will make them understand you know APA also to an extent. Okay. M Limited, a US company, has a subsidiary N Limited in India. M Limited sells computer monitor to N Limited for resale in India. Okay, right. Please wait. This goes to the next arena. Okay, if it is import, it goes to the next arena because cup is going to be the popular for everything. Let's wait. So cup means okay where there is a comparable independent entity. There is a comparable independent entity, then cup is applicable. Okay, now I progress to the next method. Okay, I progress to the next method, which is resale price method, which is known as okay RPM. Okay, resale price method, and look at the word most suitable for import of goods which are meant for subsequent sale either with or without processing. Most suitable for import of goods which are meant for subsequent sale either directly or after processing. So friends, I buy goods, sell it. Maybe I incur some Indian expenditure like processing or not, but I buy goods, sell it. Please understand what is the price to be charged. What is the price to be charged? The law goes like this. Put your mic on mute, please, Niharika. Can you put your mic on mute? Okay. The law goes like this. Allow it to be so. What Indian income tax law has to ensure here? That I purchase it at a correct price. Once more, our Indian income tax law has to ensure that purchases are made at correct prices. I am not inflating my purchase. If I inflate my purchase, my profit comes down because purchase is a cost to me. If my cost goes up, my profit comes down. This is the logic. So our law should ensure that I am not inflating the purchase price. So it's a reverse working mechanism. Allow this price to be sold. Allow this goods to be sold. Allow this goods to be sold and start reverse working. If the sale price is 1000, I should have earned a profit of 10%. So minus 100, 900. Indian expenses is 200. 900 minus 200, 700. This buyer says he is giving me a discount of 50 rupees. This buyer says he is giving me a discount of 50 rupees. 700 minus 50, 650 rupees should be my purchase price. Repeating, 1000 is my sale, minus my profit 100, minus Indian expenses, minus any functional differences. This buyer told me that he is giving me a discount. So the price should be 650. But when I look at the invoice, price is 750. No, it is not a arm's length price. If I reverse work, it lands at 650, but I have purchased it at 750, and the buyer says he has given a discount of 50 rupees also. That means you are inflating the purchase price. Not acceptable. Identify the price at which it is resold. Purchase or service obtained by the name is resold. What is the price at which it is resold? Reduce the normal GP margin. Further reduce by any expenses incurred after import. Further reduce by functional differences. 3 times reduction applied. Minus GP minus Indian expenses incurred post import minus functional differences. In the last case we saw CIF FOB. In this case the buyer, the exporter, I am the importer, the supplier is supplying at FOB, which means I am bearing insurance and freight. So his price should be lesser. Right. So in this method, I am reworking, reversing and finding out what is the price at which I should have imported. And if I have imported at a price higher, then I am making the difference, increasing the income accordingly. Okay, this is the method of resale price method, RPM, resale price method, which is applicable, which is finding out the import price. Let me start with the question number 7. LG Japan and Softtech are associated enterprise. Softtech import 200 air conditioners from LG Japan at a price of 15,000 per unit and sold them at 17,000. So I imported for 15,000, sold it for 17,000. Don't be immediately upset. India has made 2,000 profit. Wait. We have to see whether 15,000 is correct. Softtech has purchased similar products from Samsung and sold at a GP of 10% on sale. So Samsung is an independent person, whereas LG is an associate enterprise. LG offers a quantity discount of 1,000 per unit. LG offers a quantity discount of 1,000 per unit, whereas Samsung offers only 500 per unit. Per unit. So please understand, the price of LG should be less by 500 more. The price of LG should be less by 5 because they promised me 1,000 as discount. Samsung, which promised me only 500 discount, I import. Understand the logic. This is you have to catch the logic here. And that is the success story. Okay, this general sheet is Chuma miscellaneous workings, etc. Okay, let us take LG purchase prices. Imported from Samsung and sold for 1,000. Profit, okay, let's take it as 10,000. Profit at 10%. 1,000 is the profit. So import price will be, for example, no other expenses, 9,000. If this is true, then my profit with LG should be 1000 plus 500. If this is true, a person who gives me discount of 500 rupees, I am able to make a profit of 1000 rupees. A person who gives me 500 rupees as discount, I am able to make a profit of 1000 rupees. Another person says, I am giving a discount of 1000. Again, my profit should not be 1000. Then it is meaningless. Then that means he has not given me the discount. Because a person who gives me 500 rupees as discount, within I have sold and made a profit of 1000. If you say you are giving me 1000 rupees as discount, my profit should be 1500. My profit should be 1500. Simple logic. Simple logic. Let's read the question. Samsung Limited, okay, goods imported from Samsung Limited and sold and got 10% profit. Who gave a discount of only 500 rupees? You say your discount is 1000 rupees. So my profit should be 10% plus 500. 10% plus 500. Otherwise, meaningless in you telling me that you gave me discount. It is as good as you have not given me discount or given me discount of only 500. Okay. Softtech incurred freight 400 and customs duty 1500 for LG, whereas only 200 in the case of Samsung. Compute the ALP and the increase in the total income. Resale price method as it is about import of goods. Please write that also. What method you are following? What method you are following also, you please write. Okay? As a paragraph you write. Here they have given it is an associate. Okay? Imported goods resold. Okay? At what price I have resold? 17,000. Sorry. 17,000 is the price at which I have resold. 17,000. Yes. Normal GP margin, okay, at 10%. Normal GP margin at 10%. 1,700. Normal GP margin at 10%, 1,700. Okay. Extra quantity discount. Because the person who gave me 500 rupees, I am able to make a profit of 1,700. For example, you are saying you are giving me a discount of 1,000. My profit should be 2,200. Simple logic. 500. So this, your price should reduce by 500. Insurance and freight, differential price, differential cost. That is, when I import from LG, okay, I have to incur freight of 400 plus 1,500, 1,900, whereas Samsung is only 200. 1,900 minus 200, okay, 1,900 minus 200, okay, 1,900, okay, So ALP, that is actual import price. ALP, that is actual import price, should be only 13100. Sorry, it's ALP only. ALP, arm's length price, that is the price at which you should have imported, is only 13100. Actual import price 15,000. Actual import price 15,000. Difference, okay? You have paid 1,900 per machine, per air conditioner 1,900. Last year 200 machines are imported. So therefore increase in income for 200 air conditioners. Therefore, increase in income for 200 air conditioners is 3,80,000. 3,80,000. You know what note you need to complete with. You know what note you need to complete with. Okay. Okay, one catch point in examination, we are in a logical understanding itself, we will not understand why this discount. I'm trying to make you understand why this discount of 500 is only adjusted. Sir, should I adjust 1,000? No, you should not adjust 1,000. You should adjust only 500. Why, sir? Because I am comparing it with a person who has earned a 10% GP after giving 500 discount. So additional discount is only 500. That's why extra quantity discount, not the total quantity discount, extra quantity discount, extra cost. Extra quantity discount, extra cost, you will get the price. Is it better now? Is it anyway better? Just text me. Better. Yes, similar question. J Incorporation of Korea and CD Limited, an Indian company, are associated enterprise. CD Limited manufactures cell phones and sells them to J Incorporation, company based in Durham. Nepal. Sorry, if it is coming under, it should go under cup method only. Okay, during the year, 25,000 mobile phones at 3,000 per unit and 35,000 to another, which is 5,800. The transaction of CD Limited are comparable subject to the following differences. Sale to J Incorporation or FOB, whereas JKF is on CIF. The freight and insurance 700 per unit. Free warranty for 2 years, cost of warranty 500. Quantity discount 200. Same question which we did the Sony Japan. Same question. Here is where I take the help of the solutions that are worked out. Here is where I take the help of solutions that are worked out. Generally, I don't even want to open that. Generally, I don't even want to open that material. Okay. But in some places, to save time, at the same time, to get the confidence, you should get the confidence. We should be able to save time also. That's where I am going to use it. Okay, so same manner, 5,800 less functional differences, 700, 500 and a quantity discount of 200 makes it 1,200. Arm's length price will be 4,400. Okay, arm's length price will be 4,400, but the actual transaction value is 3,000. Difference is 1,400, because of which they increased. Okay, there is an increase in income. Okay, same working, same way we have worked the previous question, that Sony Japan question, same style of answering. Okay, from the independent party, we are reducing the functional differences to arrive at the arm's length price. From the independent party, we are reducing the functional differences. Okay, yeah, it's good now. Okay, I was recording at two different places for safety purposes, because the recent past has not been very supportive for me. So for safety purposes, I was recording at two different places, because of which probably the error was happening or the technology was failing. Now I'm stopped at one places and recording, but this recording will not be given to you. It is for my reference. Okay, so 4,400 is the arm's length price. Okay, by differentiate and then compare the same style in which we worked out Sony. So in places like this, I am going to use the solution material. Places like this, which will be few places, to save time, because we know the concept, we just want to be sure of our answering. Okay, but in all other places, I wish I get the time to work it out and show as far as possible. Okay, voice is still breaking. Not very sure, because is it due to technological reason? I'm as much as illiterate in technology also. I don't know it is because of technological reason, but as of now, there is the system will immediately show up that your network is weak or your network is not supported. Some way it will always show up immediately. Okay, since it is not showing it up, and very recently I upgraded also for this class, I don't think it can be in my end, but if at all it is in my end, I don't know how to rectify it. I will try. Okay, but generally I feel you can just look into your end networking also, or connect to the data and see. Okay, right. One question which we said that we'll do it here. Okay, May 2017, M Limited, a US company, has a subsidiary N Limited in India. M Limited sells computers, monitors to N Limited for resale in India. So it is importing and reselling. M Limited also sells the same computer monitor to K Limited, another computer reseller. It sells 50,000 computer monitors to N Limited at 11,000 per unit. The prices fixed for K Limited are 10,000 per unit. The warranty in the case of sale of monitor by N Limited is handled by N Limited. However, for K Limited, M Limited is responsible for 3 months. Both M and N Limited offer extended warranty at a rate of rupees 1,000 per annum. Remember, warranty is for 3 months. Warranty is for 3 months, and they have given the warranty standard rate for per annum, rupees 1,000 per annum. On these facts, determine the ALP and the effect of net profit or income of the assessee company. Okay. M Limited has a US company has a subsidiary N Limited in India, associated enterprise, because they are subsidiary. M Limited sells computer monitor to N Limited for resale in India. M Limited also sells computer monitor to K Limited, another computer reseller. It sells 50,000 computers at rupees 11,000. Whereas for K Limited, it is only selling it at 10,000. So N Limited is importing at 11,000. The warranty in case of sale by N Limited is handled by N Limited itself, whereas the warranty for sale by K Limited is handled by N Limited, the base company. So that price differential can always be there. That price differential can always be there. Okay. In my case, I am bearing the warranty, whereas in K Limited case, the parent company is bearing the warranty. Okay, in my case, I am bearing the warranty. The warranty in case of sale of monitors by N Limited is handled by N Limited. However, the warranty for the sale of K Limited, M Limited is responsible for 3 months. Both M Limited and N Limited are extending at a standard rate of 1,000 per annum. On these facts, determine the ALP and the impact. Okay. Okay. First thing which we have to write, I'm just copying, the name is alone I'm changing. Okay. Okay. M Limited, N Limited, the Indian company, is a subsidiary of M Limited, wherever it is. Okay. If 26% is held, okay, it is. So in this case, okay, N Limited and M Limited are associated enterprise, In this case, they both are associated enterprise. Okay. Okay. Computation of arm's length price. Price at which M Limited has supplied to an independent party, that is K Limited, 10,000. Price at which M Limited has supplied to K Limited, independent party. In K Limited's case, please understand, in K Limited's case, warranty are handled by M Limited. In K Limited's case, warranty were handled by K Limited, M Limited. But in my case, I have to bear the warranty. So the price at which I should have imported is lesser. The price at which I should have imported should be lesser, or the price at which K Limited imported should be added. And warranty charges which M Limited is liable to incur, okay, which is 1,000 divided by 12 into 3 months. 1,000 is for the whole year, okay, what is for 3 months. Therefore, ALP should be 10,250. Therefore, ALP should be 10,250. Actual import price actual import price is, okay, 11,000. Actual import price, okay, is 11,000 per unit. Difference is I am importing at 750 extra. Okay, therefore increase in income for 50,000 monitors. Increase in income for 50,000 monitors is 3 crore 75 lakhs. 3 crore 75 lakhs. 3 crore 75 lakhs. Okay, okay. So everywhere we should try to find out the independent party, make the adjustment. Friends, if ALP related question comes, which is normally coming, sweep that question. Okay, if the international taxation is 30 marks, 1/3 is from transfer pricing, we are sweeping it. We are not just scoring it, we are sweeping it. Okay, right? RSM, and the third is cost plus method. This is for export of goods. This is for export of goods or services. So, import of goods, what did I find out? I reverse work to find out what should be my import cost. Repeating, I reverse work to find out what should be my import cost. Export of goods. Export of goods, you know what I am going to do? I am going to straight work. It is our cost sheet. It is our cost sheet basis. Direct material, direct labor, direct overheads, prime cost, plus allocable fixed overheads, plus other indirect expenditure, plus profit should be my selling price. That is what I am going to do. That is what I am going to do under cost plus method. Okay, friends, you are very popular with this method. Name is new. Okay, in your accountancy or at the inter or at the IPCC level, whichever you have studied, you are popularly being studying a concept called loading. Why that? Even in FR, in your holding company, amalgamation and all, you popularly study a concept called stock reserve or holding. I have sold at a price higher than my cost. What is that? Cost plus. Okay, some call it as markup, some call it as loading, some call it as stock reserve. All names unrealized profit, all names boil down to the same thing. Cost plus. What is that? Plus profit. Cost plus method. Cost plus profit. Is that profit correct? Because we are bothered about only our system. We means our country is bothered about our revenue only. If it is more, I am not at all bothered. I get more revenue, I am happy. Only I should not lose revenue. My base should not be eroded. That is what is my consideration. Cost plus method. Okay, cost plus method. Determine the direct and indirect cost of production incurred by the enterprise in respect of the property. Property is goods, everything, or services. And it with profit. But that is where the problem comes. What is profit? This method, all of us, my dear friends, please listen. This method is not greatly talking about direct and indirect cost. That is a sunk cost. That is already there. It's a sunk cost. It's already there. The dynamic aspect of this is What is this profit I should have charged to my AE? That is more important. What is the profit I should have charged to my AE? So, determination of normal gross profit is only very important. So, I have highlighted something I want to again tell you. The gross profit is adjusted. I am not adjusting direct and indirect cost. That is already there. That the question will give you. Adjustments of functional and accounting differences has to be made only to the gross profit. Okay? The gross profit should be adjusted with any accounting or functional differences, so that I determine what is my correct profit, then my ALP. So I'm slowly, okay, now if you look back and see, so CUP method, directly we compared functional differences. RSM, resale price method, what did Watson ask me to remember? Watson asked me to remember that this quantity discount, differential things should only be adjusted. In cost plus method, what is Watson asking me to remember? Watson is asking you to remember, make any adjustment only to the GP margin. Adjustments has to be made only to the profit margin, because direct and indirect costs are already known. So every time you have to visit, come back and see what is the profit. Cost plus method, what is the profit? That should be your question. Okay, so differences should be made only to profit under this method. Don't worry, we'll come back and do questions. I'm just completing some methods. We'll come back and do more questions. That Chetan is a very good question. Hotmail, a USA company, holds 30% shares in Staffing Solutions Limited, India. Associated enterprise, holding 26% or more. Staffing Solution develops software for various customers including Hotmail. Staffing Solution during the year billed Hotmail for 2000 man-hours at rupees 400 per man-hour. The direct and indirect cost is 6,50,000. That is my, okay, that is a sunk cost I already have. Plus GP ratio should be there. Staffing Solution is also billing to X Limited at the rate of 800 per man hour, although the persons working are of same caliber of that of persons working for Hotmail. Staffing Solution earned a GP of 40% from X Limited. 40% from X Limited. Transactions are comparable subject to following differences. Differences will not be there much in cost. Very rarely costless. The differences will be there only in the GP. Hotmail has given technical know-how to Staffing Solution. There is no such know-how provided by X Limited. The value of the technical know-how received from Hotmail Limited is 10% of normal GP. Hotmail gives me technical know-how and says, look, for others you are charging 40% profit margin, means cost plus. For me, you should only charge 36%. Why? Because I am giving you know-how. Otherwise, your 6,50,000, which is your direct and indirect cost, would have gone up. Because if you are, I am giving you know-how. I am not charging anything for the know-how. Do one thing. For others, whatever profit is there, for me 10% lesser profit. That is my know-how cost. Accepted. Difference can be, functional differences can be there. So if for others I have charging 40% for If for others, if I am earning 40% profit, with regard to Hotmail, I can only earn 36%. I can earn only 36%. Quantity discount was given by staffing to Hotmail, which can be valued at 5% of normal GP. Staffing Solutions provided 60 days credit to Hotmail, whereas no such credit is provided to others. The cost of credit is 20% of GP. Now you have to remember, here I am the loser. The Indian entity is the loser. Sir, others are all take cash, take the goods. All other parties, they pay me in advance or pay the cash and take the goods. But you are asking for credit. That means the price I should charge to you is more. Because I have a working capital cost. I have to get bank overdraft or working capital cost is there for me. My cost of capital is 20% of GP, sir. So I will charge you more only. Compute the ALP and the increase in the income. Just read through, I will go to the answers. They both are associated enterprise. Since it is provision of service by the Indian entity, please write this also. In the last case, I did not write, but in exam, please write. Since it is provision of service by Indian entity, okay, cost plus method should be adopted for determining ALP. Cost plus method should be adopted for determining ALP. Okay. Determination of GP to be earned from AE, associated enterprise. What should be my GP? First, we should find that. Then only ALP itself comes. Because unless that plus is the question here. What is that plus? Is the question in these type of aspects. Okay. GP earned from an independent enterprise. Okay. Gross profit percentage earned from an independent enterprise 40. GP percentile from an independent enterprise is 40. Less functional difference. For technical know-how, okay, for technical know-how at 10%. For technical know-how at 10%. 10% of GP, not anything, or 10% of GP. So my GP can come down by 10%. My GP can come down by 10% because they are giving me technical know-how. For quantity discount at 5% of GP. For quantity discount at 5% of GP. Add cost of credit provided 20% of GP. Credit given means I should enjoy. My profit should be more because I'm bearing interest cost, boss. Unless my gross profit increases, I cannot bear that interest cost. So I'm giving you credit means my GP should be more. Therefore, profit to be made on transaction with AE. Therefore, profit to be made on transaction with AE is 42%. Therefore, profit to be made on transaction with AE is 42%. Ipada computation. Somebody was also asking me while registration itself that will the classes be in English. I have told them, I again tell you that the classes will only be in English. The normal Tamil words which comes in a flow will not affect you, okay, at times, but since it is fast track classes, I'm not deviating. So if at all there is a joke, if at all that can only be in mother tongue, otherwise the classes will only be in English. Computation of, okay, ALP. Computation of ALP. Direct and indirect cost. 6,50,000. Direct and indirect cost 6,50,000. Cost as a percentage of profit. If GP is 42%, then 42% on sale, then cost is 58%. Sale minus GP is equal to cost. Cost of goods sold is equal to sale minus GP. GP is 42%. So this should be 58%. This should be 58%. Therefore, income, that is ALP, should be 6,50,000 divided by 58%. Okay, 6,50,000 divided by 58%. 11,20,690. Therefore, ALP should be 11,20,690. Actual transaction value, the person's, okay, it is 2,000 man hours into 400 per man hour. Our invoice price is 2,000 into 400. 2,000 man hours into 400 per man hour. Therefore, increase in income. Therefore, increase in income will be 3,20,690. Therefore, increase in income will be 3,20,690. And you know what note to write after that. What did I do? I find out my GP. My GP is, for Hotmail should be 42%. Cost plus. So cost is 650. 42% on sales. So I found out what should be my sale price and found out what should be my increase. cost plus method. Find out the cost and the increase to be made in the cost. Find out my ALP. Question number 11. XYZ India produces steel furniture which is supplied to its holding company XYZ Incorporation USA. XYZ India Limited raises invoice for rupees $3,000 per piece of furniture, while the direct and indirect cost of manufacturing works out to 2,250 per piece. XYZ India Limited does not supply to any other product, any other party. The database in public domain shows that the steel furniture industry. It should be steel furniture industry. Okay. The database in the public domain shows that the steel furniture industry in India of comparable companies which has exported 3,000 US, okay, and the industry's average total expenses is 80%. Determine whether the transaction is at arm's length price. I'm not writing the first part, that is there is a subsidiary, okay. So they are ALP, they are associated enterprise. I'm not writing that. Okay, I'll copy it and put it later. Okay, right. Sale price of steel to subsidiary, okay, to associated enterprise 3,000 less cost, direct and indirect cost is less direct and indirect cost is 2,250. Profit $750. Profit $750. Profit as a percentage of sale. Profit as a percentage of sale is 25%. Profit as a percentage of sale 25%. Industrial average is 100 minus 80. Cost is 80. The industrial average is total expenses of comparable company is 80%. Industrial average profit is 20. Therefore, there is no adjustment required as the transaction value is more than ALP. So it is enough if I have declared 3000 into 20%, 600 as my profit. It is enough if I have declared 600 as my profit in India, but I am declaring a profit of 750. Don't worry about euros, etc. On a conceptual basis, understand. I am declaring a profit of 750, which is comparatively more than the ALP. So the AO will not make any adjustment. Where ALP determined by the AO reduces the income or increases the losses, the assessment will be dropped. The assessment will be dropped and the assessment will not be continued. A Company Limited is an Indian company at Pune providing, okay, it's a DTP, domestic transfer pricing question, okay, but it is a good question to work out and see. Don't worry about, sir, it is not an international party, it might fall under DTP, domestic transfer pricing also, but it is a very good question. A Company Limited is an Indian company at Pune providing software services to various customers and also its associated enterprise B Company in Mumbai. It billed 2 crores for the software services rendered to associated company. The total direct and indirect cost incurred is 175 lakhs. In the case of unrelated parties of similar services, it earned a GP of 50% on cost. Following things distinguishes. Okay. A. B Company Limited provided technological support in the software development project assigned by it. In case of unrelated party, the value of support would be 17 lakh 50,000. The value of support will be 17 lakh 50,000, nothing but 10%. We have to anyhow make the adjustment only in the profit. We have to anyhow make the adjustment only in the profit, nothing but 10%. A Limited gave a discount of 10% to B, and this benefit is not given to outsiders. This benefit is not given to outsiders. A Company Limited carried out marketing function in respect of transaction with B Limited and incurred 1312500. This marketing function is not normally provided to outsiders. A Company Limited provided extended period and cost of credit. Okay, extended credit period and the cost of credit is 2.5% of cost. Please remember, it is 2.5% of cost. This extended credit period is given only because B Company is its associated enterprise, not because of any other reason. State the most appropriate method to be adopted for ALP. Which is the appropriate method? Cost plus method. They are asking, state which is the appropriate method, cost plus method, and compute the ALP's gross profit markup. They themselves have said, in the method we will, in any other method, we will not go for gross profit markup. And how much of income has to be increased or decreased for the transaction carried out by A B Limited. Please look through. In case of unrelated profit, gross profit as a percentage earned as a percentage, gross profit earned as a percentage of cost 50. Gross profit earned as on cost 50. On cost I have earned 50. Yes. Difference due to technological support. 17,50,000 on a total cost of 175 lakhs. 17,50,000 on a total cost of 175 lakhs. Ten percent. Discount. There are two ways you can work out this discount. Listen once. There are two ways you can work out this discount. You can take the stand discount should not be given. I have, in the answers I have provided, I have taken the stand discount should not be given, because when it is not given to external parties, you cannot give it because they have not said it is quantity discount, bulk discount, etc. Or you can assume that this being a bulk discount, you should give. In this case, here I am working a different answer. In your material, in our solution, I have worked it in a way. I will work out in a different way. Assume that it is normally provided for the quantum of business. I am assuming that it is normally provided for the quantum of business. Credit, extended credit period. For the extended credit period, directly 2.5%. Directly 2.5%. Revised GP margin for AE. Revised GP margin for AE. Minus 10 plus 2.5. Total direct and indirect cost specified 175 lakhs. Total direct and indirect cost specified, okay, 175 lakhs. And marketing cost specified. And marketing cost specified, okay, 1312500. There is another way you can make the GP adjustment also, but vaguely I remember in the suggested answers they have increased it here. Okay, instead you can make the GP adjustment also. It will come to approximately 7.5% if I am right. I'll just check and show you. okay, divided by 175 as a percentage, it will come to 7.5%. Okay, you can make this 32.5 accordingly as 40 also, not an issue, but very vaguely I remember that in suggested answers they worked out like this. Okay, so my direct and indirect cost comes to 1 crore 88 lakhs 12,500. 1 crore 88 lakh 12,500. Okay, this GP is 50% on cost only. Now whatever I have worked out is 30. Okay, GP as a percentage of cost to be marked up. So 1 crore 88 lakh 12,500 into 32.5%. Okay. Therefore, ALP should be this much. Therefore, ALP should be 2 crore 49 lakh 26,563. Don't worry about rounding off small mistakes, etc. Okay, 2 crore 49. Okay, A Limited billed 2 crores for software development services. Okay, actual billing 2 crores. Therefore, increase in income patiently look through. Okay, cost plus method. The whole focus should be on GP. Okay, if your GP is right, you are through with this method. If your GP is right, you are through with this method. We'll do more questions. Let me complete the method and come. Friends, the not so popular method is profit split method. The not so popular method is profit split method. In our country, it is not popular. What is this method? Two organizations, two organizations together do a combined project. Two organizations together do a combined project. Development of intangibles is what they call it as patent, copyright. Okay, an Indian organization and a Germany based company is developing a patent for a US person. Find out the total profit. Total profit is total revenue minus Indian expenses and Germany expenses. Total revenue minus whatever expenses incurred by the Indian entity as well as German entity. Will give you my total profit. Will give you my total profit divided between them in some good ratio. What can be the ratio? Majority of the time it is manpower. Since these are intangibles, either on manpower basis or capital employed or assets employed. Indian entity has incurred, employed so much assets. German entity so much assets in that ratio. Or they have put so much as capital in that ratio. But the most popular is man-hours. So, from here on, I am going to very often speak about this particular concept called FAR analysis. FAR. The whole transfer pricing, if there is a theory question, you can write this. FAR, FAR analysis. Functions, assets and risk. This is the base for transfer pricing. Functions performed, assets deployed, risk taken. This not only here. Henceforth, I am going to speak more about it. FAR analysis. Functions, assets and risk. Okay. Determine the combined net profit of the AEs, both the enterprises, and evaluate the contribution by each of them by analyzing the functions, assets, risk, and split amongst them. This is known as FAR analysis. Worldwide, FAR analysis is the most accepted aspect. Not yet popular. This method, FAR analysis, is popular in India, but this method of profit split is not yet popular in India. The last is transaction net margin method. Every transaction, analyzes it as every transaction, what should have been the profit made. Analyze from the perspective of every transaction, what should be the price, arm's length price, based upon the impact it has on its profit, cost, etc. It is not one method on a whole, totally 50,000, totally 1 lakh. Each and every transaction I will analyze and try to find out what will be the ALP. What will be the ALP? 5 methods are there. Comparable uncontrolled price method, resale price method, cost plus method, transaction net margin method, profit split method. This profit split method is not yet popular in India. So there are 4 methods by which popularly we determine the arm's length price. Popularly we determine the arm's length price. Okay. So let's continue with some questions about the methods and then progress. Okay. Some questions about the methods. And keep progressing. Okay. Question number 8, I just shared with you the screen. Question number 9. State Private Limited, located in a special economic zone since April 2013. Actually, they enjoy something known as 10AA. Okay. Is engaged in manufacturing activity by importing raw material from its holding company, Bada Incorporation of UK. The following details are furnished. Chetan Private Limited imported goods for 60 crores during the financial year 2021 from Bada Incorporation. Bada Incorporation supplied similar raw material to unrelated party with a markup of 20%, whereas for Chetan at 25%. Okay, suppose Bada Incorporation's cost is 10. Bada Incorporation's cost is 10. They would supply for 12 to any party, but to their associated enterprise, which is in India. I am buying it at 12.5. Others are buying it at 12. I am paying more. Imported. Chetan Private Limited was allowed to use the brand name Bada Incorporation without any payment, whereas the other parties cannot use the brand name. The annual cost of brand value is 100 lakhs. Chetan Private Limited was allowed credit period of 2 months, whereas the other unrelated parties of Bada Incorporation is allowed only 1 month. The interest cost is 12% per annum and the purchases were uniform throughout the previous year. AO referred the matter to TPO for determination of ALP. Compute the ALP of the transaction and the adjustment to be made. What is the due date for furnishing audit report? If TPO has enhanced the income of Chetan Private Limited by 2 crores, will that enhancement be eligible for 10AA? Will Chetan Private Limited become liable to pay penalty for underreporting of income? Okay, so these are all the questions. Just go through it once. Chetan Private Limited imported goods of 60 crores where the markup is 25%. Where the markup is 25%. Okay. Import price of Chetan Private Limited. Import price of Chetan Private Limited 60 crores. 60 crores. Less markup at markup 25% on cost. 25% on cost. Markup of 25%. FMA markup is cost plus 25% on cost. 1/4 on cost is 1/5 on sales. 1/4 on cost is 1/5 on sale. less markup at 1/4 on cost, which is 1/5 on sale. So divided by 5. Therefore, therefore cost price for the supplier. Cost price for the supplier 60 crores minus 12 crores, 48 crores. Therefore, cost price for the supplier 48 crores. And markup for other unrelated parties 1/4. And markup is 1/5, sorry, 1/5, that is 20%. And markup for other unrelated parties, they are only marking it up by 20%. They are only marking it up by 20%. So, for me, the associated enterprise, 12 crores is the markup. For others, 9 crores 60 only is the markup. Had you supplied to an independent party, you would have marked up only by 9 crores 60 lakhs. To me, you are marking, I am the importer here. My cost is more, 12 crore. Difference in markup. Okay, 12 crore minus 9 crore 60. You have made an extra profit of 2 crore 40 lakhs. You have made an extra profit of 2 crore 40 lakhs. Had your original cost is just 48 crores. For others, you would have marked up only by 20%. 20% of 48 crores is 960. For me, 25% of 48 crores. You are marking up by 12 crores. Difference in markup, 2 crore for you have made extra profit. India's profit is getting eroded because less functional difference. Why this functional difference? Dayton is allowed to use the brand name, cost of brand name 1 crore. Brand name usage. Yes, I understand. You gave me brand name to use. The cost of brand name is 1 crore. The cost of brand name is 1 crore. To that extent, you can have the difference. I accept. Dayton Private Limited was having a credit period of 2 months, whereas the other parties are only having a credit period of 1 month. Other parties are only having credit period of 1 month, whereas I am having a credit period of 2 months. So the cost of credit I have to bear, which is 12% per annum, and purchases are throughout the year. Purchases are throughout the year. Purchases are throughout the year. Extra additional interest cost. Purchase per month. That is import per month. I will do it and then tell you. Total is 60 crores divided by 12 months. Import is 5 crore per month. 5 crore per month. Okay. Interest cost will be 5 crore into 12% into 1 by 12. Okay. 5 crore into 1%. 5 crore into 1%. Interest cost will be for 1 month extra interest you need to bear. So 5 crores is the total purchases per month. I am extending credit period by 1 month. Okay, and cost of funding is 12%. Cost of funding is 12%. Oh, okay, just sorry. I'm sorry, because I have already computed it per month. I have already computed it per month. Okay, so I should not again do it per month. Okay, 5 crore into 12%. Okay, 5 crore into 12%, 60 lakhs. 60 lakhs will be the additional interest. But this is how the institute has answered it in the suggested answer. I have a small difference of opinion with the institute here. In my opinion, I should not take 60 lakhs divided by 12 because my borrowal from the bank will not be for profit. My borrowal will only be for the cost. So in my opinion, this should only be 48 lakhs divided by 12. This should be the money borrowed by me. I hope the class is understanding. The institute once in suggested answers has put 60 lakhs into divided by 12. That is per month purchase. They have said that purchases are uniform throughout the year. So I have purchased 60 lakhs. So he would have borrowed 60 lakhs. I cannot assume. Because I know the cost itself. He will not borrow for making profit. He will only borrow for purchasing stock, raw material, purchasing consumable stores. All those things put together is only 48 crores. So in my opinion, only 4 crores should be taken as per month. Okay, import per month on cost basis. So I should put 48 lakhs. Okay, if at all you put 50 lakhs also, 5 crores also, it's okay. But you make the answer clear to the examiner how we got it. Okay, therefore, increase in income. Therefore, increase 2 crore 40 lakhs, 1 crore is acceptable, 48 lakhs is acceptable, the remaining 92 lakhs is not acceptable. The difference in markup led me to 2 crore 40 lakhs. The difference in markup was 2 crore 40 lakhs. In that, some things are acceptable. 1 crore is because of brand name, accepted. 48 lakhs is according to interest, accepted. So your profit should have been only 92 lakhs. You have increased your income by 92 lakhs. I will ensure that it is taken out of yours and this will be treated as a separate income. Therefore, increase in income 92 lakhs. Okay. So, compute the ALP and the income and adjustment way. What is the due date of filing? Though we are going to study it later. Due date 30th November. Okay. Due date 30th November for TP cases. If transfer pricing officer has enhanced the income by 2 crore, will that enhancement be okay? Income enhancement can be only rupees 92 lakhs. Transfer pricing officer cannot increase it by 2 crores. On what basis he is increasing by 2 crores? There is no basis. So income enhancement can only be 92 lakhs. Since the income is enhanced by assessing officer, assessee cannot claim any deduction or exemption on such increased income. Since the income is enhanced by the assessing officer, assessee cannot claim, my dear friends, assessee cannot claim any deduction or exemption against such increased income. Section 270A, penalty for underreporting or misreporting of income can be levied by the assessing officer. Okay, yes, we will study this as a separate chapter in our administrative provision, where penalty will be 50% of tax on the underreported or misreported income. 50% of the tax on the underreported, or if it is underreported, 50%. If it is misreporting, 200% of tax. We will study that later. But yes, this can be levied.
The audit report due date is asked, sir.
30th November.
1 month before.
That is only for the 30th October. 92E has not been changed. 44AB level, 92E. Audit report not under 44AB but 92. Question in page number 35 or 34, whatever it is. Nano Incorporation, a German company, holds 45% of equity shares of Hi-Tech, an Indian company. Hi-Tech is engaged in development of software and maintenance of the same for customers across the globe. Its clientele includes Nano. During the financial year, Hi-Tech had spent 2,400 man-hours for developing and maintaining software for Nano, with each hour being billed at 1,300. Cost incurred by Hi-Tech Limited for executing work of Nano is 20 lakhs. Okay, so we are going towards cost plus method. Hi-Tech has also undertaken development of software for Modi Industries, for which Hi-Tech had billed 2,700 per man-hour. The person working for Modi Industries and Nano were part of the same team and were of matching credentials and caliber. Hi-Tech made a GP of 60% on Modi Industries. GP is 60%. Hi-Tech Limited transaction with Nano are comparable to the transaction of Modi, subject to the following differences. Nano has given technical know-how, which is 8% of GP. So my GP will come down by 8%. Nano involves huge number of man-hours. A quantity discount of 14% should be given. Discount of 14%. Hi-Tech has offered 90 days credit to Nano. Cost which is measured at 2% directly. 2% of the billing rate. It is direct. It is not 2% of GP. It is just 2%. It is just 2%. Compute the ALP and the amount of increase. Read through. So we are going by cost plus method. Nano Germany is holding 45% of shares in high tech, where 26% or more is held, they become associated. We have to go by cost plus method. Okay. High tech made a profit of 60%, okay, from an independent party. 60% from an independent party. Okay. Cost of know-how is 8%. Discount is 14%. Discount is 14%, and this is directly 2%. So 40% should be the GP. 60 minus 8 for know-how, minus 14 for quantity discount, plus 2 for cost of credit facility makes it 40. Direct and indirect cost. Direct and indirect cost. Spend 2,000 manpower for developing the maintaining in each of being built out. Cost incurred is 20 lakhs. If GP is 40%, then cost is 60%. Actual transaction value 2,400 into 1,300. 2,400 into 1,300. 2,400 into 1,300. I think I made a mistake. Sorry. I think I made a mistake. Eight, I took everything. Sorry. It's 8% of GP. Sorry. Thanks, Abhipriya. Sorry. %14 of 60%. This is true. This is right. This is right. Sorry for the mistake. Amar Private Limited Bangalore is engaged in IT-enabled services. It is a subsidiary of ABC Incorporation in USA. It is also providing similar services to another Singapore company. Its billing informations are billing to its associated enterprise $85,000, billing to an independent party $70,000. ABC Limited has provided a loan of 1 lakh US dollars to Amar Limited towards purchase of hardware for executing the project, rate of interest being 3%. Direct and indirect costs incurred are $100 and $200 per hour respectively. Amar Private Limited works for 9 hours per day for 15 days to execute the project for ABC Incorporation and 8 hours per day for 15 days for SAK Limited. Services was provided by the company to both its customers throughout the year. Warranty was provided by SAK Limited for a period of 2 years. Cost of warranty 1% of direct cost. The cost of warranty is neither included in direct or not indirect cost. Assuming a conversion rate of 64, compute ALP at cost plus method and the amount to be added to the income of Amar Private Limited. What is required in cost plus method is the GP margin. Without GP margin, that method doesn't work. Cost plus, that plus is more important. Read through. Computation of gross profit margin earned by transacting with independent party. SAK. Okay. First, unless GP is there, we cannot do cost plus method. Unless GP is there, we cannot do it. So, computation of gross profit margin earned by transacting with an independent party, that is SAK. Billing per month for SAK 70,000 US dollars. Okay. Billing per month in US dollars, how much it comes to? 70,000 less direct cost. How much is the direct cost? Okay, you can see direct and indirect costs are 100 and 200 per man hour for SAK, 8 hours per day for 15 days. 8 hours per day for 15 days. 8 hours per day for 15 days into 100 per man hour. Okay, direct cost in USD. Okay, 8 hours into 15 days into 100 per hour. Okay, that's how I got this. That's how I got this. Indirect cost in USD, again 8 into 15 into 200. Okay, 8 hours per day for 15 days I work, 200 per man hour. 200 per man hour. Okay, right? Okay. Warranty charges not included in the direct and indirect is 1% of direct cost. Warranty charges, okay, is 1% of direct cost. So my total cost is 36,120. Profit, okay, 70,000 minus 36,120, 33,880. GP as a percentage of sale. GP as a percentage, actually we'll find out at cost so that it becomes easier for us. Okay, instead of doing sale and then minus this is equal to cost, we'll find it out on cost itself. Okay, 33,880. Okay, as a percentage, I'm getting 94% GP. I'm getting 94. If you want it to be in two digit, it will be 93.8. It will be 93.8. 70,000 minus 12,000 minus 24,000 minus 120 warranty cost gives me a profit of 33,880. GP as a percentage of cost becomes 93.80 or 94%. Unless I get the GP, I cannot proceed. Unless I get the GP, I cannot proceed. Okay. Computation of ALP. Direct cost for ABC Incorporation. How much? The question says 9 hours for 15 days. Okay, right? So it is 9 hours into 15 days into 100 per day. Okay, 9 hours into 15 days into $100 per day. Indirect cost for ABC Incorporation is again 9 into 15 into 200 is again 9 into 15 into 200. Indirect cost. Interest, you can see ABC has provided a loan of 1 lakh US dollars at 3% per annum. Please be careful. At 3% per annum, but we are working monthly. We are working monthly. We are working monthly. So this is 3% per annum. So interest cost will be 1 lakh US dollars into 3% into 1 by 12. Repeating, 1 lakh, we need it in dollars only, into 3% into 1 by 12. Total cost 40,750. Add markup 93.80 percentage of cost. Add markup this into 93.80 percentage. 93.80 percentage. Okay. Total billing, which is nothing but the ALP, total billing, which is nothing but the ALP, actual billing is actually more. Actual billing is actually 85,000 USD. Okay, 85,000. Okay, since the ALP is lesser than the income, the proceedings will be dropped and the income will stand. Okay, this is a question where we understood that my ALP is this point, my dear friends, which is lesser than what I am actually getting. So be silent, drop the proceedings. Our base is not getting eroded. We are, as a country, we are getting only more tax, more benefit, no problem. Beta Incorporation, having its business in Singapore, has advanced a loan of 1,60,000 Singapore dollars to Beta Limited Mumbai. Book value of the asset was 125 lakhs. Beta Limited provided software backup support to Beta Incorporation. Beta Limited spent 50,000 man hours during the financial year for the services rendered. The cost for Beta Limited is 75 per man hour in Singapore dollars. Beta Limited has billed it at 90.75 per man hour. Gamma Limited in Mumbai, which has a similar model, provides backup support to my Malaysian company. Cost and profits are direct cost, indirect cost, profit. Calculate the arm's length price for the transaction between Beta and Beta Incorporation based on the above using the transaction net margin method where Singapore dollar is equal to 45. Explain if there is any adjustment to be made to the total income of Beta Limited. Read it. Look at the way we are starting the question. Look at the way we are starting the question. Beta Incorporation advanced a loan of 1,60,000, which is 45. Okay. Loan advanced by Beta Incorporation. Loan advanced by Beta Incorporation 1,60,000 into 45. 1,60,000 into 45. Total value of assets of Beta Limited. Total value of assets of Beta Limited 125 lakhs. Okay. 58% of the asset is funded by an external party. 58% of the assets, okay, where more than 50% of the book value of assets is funded by another enterprise, then they become associated enterprise. In this case, 58% is funded by Beta Incorporation. Hence, they both are associated. Always, as the first part of the answer, write this. Always, as the first part of the answer, please write how they are associated. How they are associated. Okay, right. Beta Limited has spent 50,000 man hours for the services. The cost for Beta Limited is 75 per man hour. $75, okay, per man hour. Okay, so cost plus method to be adopted. Computation of ALP. Cost, direct and indirect. How much is that? It says 50,000 man hours into cost is 75 per man hour into 45 rupees is the conversion. They have given it in Singapore dollars. So I can do it in dollars also if you want. Here I am doing it in rupee. Okay. Okay. 16 crore 87 lakh 50,000. 50,000 man hours into 75 Singapore dollars, 75 per man hour in Singapore dollars, which if I convert it, I am getting 45. Okay, right? Profit, they are making an independent party is making a profit of 200 out of 800 cost. 800 is the cost. Please write here or please mark it. 800 is the cost, okay? And normal profit, which is 200 divided by 600 plus 200. Okay, 800, which is 800, my dear friends, 1/4 of the cost. Correct? 800 if this is the cost, 200 is the profit. Okay, 1/4 of cost. So this divided by 4 is my profit. 1/4 of the cost. Okay, therefore ALP. Therefore, ALP, cost plus markup. Cost plus markup. Okay. Therefore, ALP, cost plus markup. Actual billing, how much they have billed? 90.75. 50,000 into 90.75 into 45. Okay, 50,000 into 90.75 Singapore dollars per man hour. So 50,000 into 90.75 into 45. Okay, therefore, increase in income. Therefore, increase in income is to the extent of 67 lakh 50,000, and we know what note to write. If it is suo motu, fine. If it is increased by the AO, then no exemptions, deductions, penalty provisions can come. Of course, it is not as per APA is our assumption. Next question. Anush Motors Limited, an Indian company, declared income of 300 crores, computed in accordance with the provision of the law, but before making any adjustment in the following. 10,000 cars are sold for Resale Limited, USA, holding 30% shares in associated, which is less by $200 per car. So 10,000 into 200 into conversion rate, the income will increase. They have given what is the, which is less by 200. So 10,000 into 200 into conversion rate. Royalty of 1 crore 20 lakhs dollars was paid to Kyoto Limited, a company for using their technical know-how. So we believe that the other party is the exclusive owner of the technical know-how. We believe that the other party is the exclusive owner of the technical know-how. Okay, for manufacture of car. However, the same is available for 90 lakh dollars. So I have paid 30 lakh dollars extra into the rate. 30 lakhs dollars extra into the rate. Loan of 1,000 crores euro, carrying 10% is advanced by a German company. The book value of the asset is 90,000 crores. The German company has advanced the similar money at 9%. So 1% extra. The total interest paid is 100 crores at 10%. 100 crores at 10%. What is allowed is only 9%. So 10 crore euros into rate. Okay, into 63 or 84 as the case may be. Straightforward question. I'm not wasting time. Okay. We all know it is at present 300 crores. add cars sold at a lesser price. Okay, it is you can see that, sorry, you can see that it is 10,000 into 200 into 63. 10,000 into 200 into 63. Okay, 10,000 into 200 into 63 would have given us 12.6. You can just see it in the calculator. 10,000 into 200 into 63 will get us 2.6, 12.6 crores. The next one is also straightforward. $30,000 into 63. Convert it into crores. 30 lakhs dollars into 63. 30 lakh dollars into 63. Convert it into crores and see 18.9. Excess interest paid. The book value of the assets of Anush is 90,000 crore. Loan provided is 84,000, more than 50%. So how to compute excess? 100 divided by 10 into 1, because 9 is the normal rate, into 84 is the dollar rate, the euro rate, into 84. 100 divided, so 10 into 84, 840 crores, because 100 itself is in crores. 100 itself is in crores, so 100 crores divided by 10 into 1 into 84, divide again by converting it into crores, you will get 840. So income after adjustment will be 1175. Income after adjustment will be 1175. Hopefully it is a suo-poto adjustment, otherwise there will be more problems. There will be more problems. May 20 November. Okay. May 19 and now the 19th. XE Limited is an Indian company in which Zilla Incorporation, a US company, holds 28% shares. Following are the transaction between the two companies. XE Limited sold 1 lakh pieces of t-shirt at rupees 2 per t-shirt to Zilla Incorporation. The identical are sold at rupees 3. XE Limited borrowed 2 lakhs from a foreign lender based upon the guarantee given by Zilla Incorporation. For this, XE Inc. paid 10,000 as guarantee fee. To an unrelated party, I would have one day paid 7,000. XE Limited paid 15,000 to Zilla, $15,000 to Zilla Incorporation for getting potential customer to improve its business. Zilla Incorporation provided the same services for $10,000. Assume that the rate of exchange is 64. XE is located in SEZ and its income before transfer pricing adjustment was rupees 1,200 crores. Compute the adjustment to be made to the total income, assuming that such adjustments are made by the assessing officer and whether you can claim it. Okay, straightforward and simple again. Okay, requesting you to look into the answer. Okay, difference in selling price of t-shirts, difference in selling price of t-shirts, my dear friends, okay, 1 lakh into $1 into 64 rupees. 1 lakh t-shirts into $1 into 64 makes it 64 lakhs. Makes it 64 lakhs. Makes it 64 lakhs. Similarly, borrowings 3,000 into 64. $3,000 into 64. $3,000 into 64. Okay, and then business promotion $5,000 into 64. So the total increase is due is 69,12,000. The increase is by the AO. The increase is by the AO. So you cannot have the benefit of, so assessee cannot have the benefit of any exemption or deduction. Assessee cannot have the benefit of any exemptions or deductions. So where are we in our understanding? We started with section 92, the base provision for arm's length price. We started with section 92, the base provision for arm's length price, which said that any international transaction with an associated enterprise should be at arm's length price. Where it is not in arm's length price, AO will make the adjustment provided it results in increase. If it is decreased, no such adjustment. Later we are going to study against that increase you cannot claim any benefit if the AO does that. Moved on to 92A, associated enterprise. 92B, international transaction. Both international transaction, both we saw. 92B subsection 2, deemed international transaction. 92BA, that is domestic transfer pricing, can wait. 92C started with ALP. 5 methods of ALP. Cost plus method is the L for everything, that is the basis. Somewhere we should have an independent party. GP, we need an independent party. Resale, independent party. So cost comparative method is the basis. Comparative uncontrolled price method. Resale price method. Cost plus method. Transaction net margin method. And the not so popular profit split method. Not so popular in India. And then there is something known as residuary method. Using this, ALP should be computed and the increase should be analyzed. We are at this level of ALP. How to determine which method should be adopted? Some theoretical understanding. How to determine which method of ALP should be adopted? This is again go back to the concept of for analysis. The law says use for analysis. Based upon that, you find out which method of ALP you should go by. Okay? 1 minute. For choosing the right method, specific characteristic of the property transferred or services provide specific characteristics. Services provide loans. Adukala directly you will get the interest rate, everything. Functions performed, risk assumed, market condition, and contractual terms should be analyzed. For determining the method, which is the right method of TP, because we have 5 methods, leaving profit split also we have 4 methods. Which method should I choose? Depends upon the characteristic, services performed, how far you are able to get the functions correctly, risks you are able to assess, what are all the contractual terms between the parties. And in a question also we saw generally the steel market is 80% cost. General market conditions will all be taken into consideration for determining the aspect. Imagine a circumstance, my dear friends. I don't have data for the current year. I don't have data for the current year. Can I take the previous year or preceding year data? Yeah, take it. But law keeps one full stop on you. It says, okay, take it. But at the time of assessment, which can take 1.5 years, 2 years, at the time of assessment, if the current year data is available, assessing officer will complete it in current year data, even though it was not available when you filed your return. Now you cannot conduct. No, at that time it's not there. Had it been there, I would have increased the income. The data pertaining to the current year should only be considered. However, where the data is not available before filing the return, then the data of the preceding year consider. But remember, in continuation of the above, where the data is subsequently available, that is after filing but before completing assessment, then data of the current year will be used for assessment, irrespective of the fact that this was available or not at the time of filing of return. So as far as possible, current year, assessing officer doesn't have an option, but he will use the current year data only. He will use the current year data only. Okay? Great. For a particular transaction, multiple ALP are available. How can I get multiple ALP? In one method itself, I get 2 or 3 prices. That is also known as multiple ALP. Listen, in one method itself, I will get 2 or 3 prices, that is also multiple ALP, or for a one transaction there can be more than one methods also. For one transaction, one method, more prices, band of prices is more. For one transaction, multiple methods can be used. I can use TNMM, I can use cost plus also. And getting various. How to do about this? How to go about this? Please understand for a minute. This is theory, but interesting theory. Where multiple arm's length prices are available. What is multiple? I have already told. Go by average. Take the average of the prices. Take the average of the prices. Okay? Take the average. If the variation is high, take weighted average. Which can be sales in the case of resale price method, cost in the case of cost plus method. You can understand. Go by average, or you can even go by weighted average, where preceding year, current year, before years are taken. Take weighted average, because the price fluctuation, price band is very high. Take weighted average. If the available option is more than 6, then range concept. Friends, let me again come from the top. Multiple ALP available. What is meant by multiple ALP? Only one method I follow, but in that the price band is big. I follow only resale price method, but my importer, but the supplier has applied to various parties at various rates. So multiple ALP is available. All independent. He is supplying at various rates. For you 100, for you 200, for you 150. What is your name? 20. What is your name? All are independent party. I am the only associated enterprise. Or, because if you by mistake someday out of sheer passion you take the material and read, very tough to understand. I think the material is prepared not to understand. Let's come back. Okay, where following TNMM in the material, RSM, cost plus method, there are obviously these can only be followed, because profit split method, except profit split method is not popular in India. It's forget it. So don't worry about that if at all you are reading the material. Where current year, past year data are taken and you arrive at again multiple. Take the average. If the 120, 121, 122, average 120. As I told you, for you 20, for him 100, for him 200. Fluctuating. Probably that 20 is buying 1 lakh unit. That 100 is buying 10,000 unit. This 200 fellow is buying 1,000 units only. So weighted average, where the fluctuations are high, we have studied while computing goodwill itself. Weighted average, if the profits are very fluctuating, not showing. Having said that, if number of option is more than 6, go by range concept, which is popularly known as data set method. DATA SET, data set method, where in respect of an international transaction, the most appropriate method results in more than one price. ALP on the basis of data set constructed. Data set will be only if it is 6, otherwise it is only average. What is this data set? It is the statistical way of finding out. It is a statistical way of finding out. How to do this data set? Construct a data set with 6 or more entries. Ascending order. In the ascending order constructed. Okay? In the ascending order constructed. The minimum is 35%, maximum is 65%. Is our range. What is the range? Okay. There is one other way they interpret range. Is it falling between 35% and 65%? Then adopt it. If the price of at which international transaction has actually been undertaken within the said range, 35 to 65, then let that be ALP. If it is outside the range, then take the average as the price. Take the average as the price. But in income tax law, slowly there is a concept creeping in, which should creep in human beings also, but in income tax law, we call it as tolerance. You know where this concept, it started here, now it is best utilized in 2 or 3 places. Section 50C talks about tolerance, actual price or actual consideration or stamp value, whichever is higher. However, if the stamp value does not exceed 110% of actual consideration, tolerance, up to 10% I will tolerate. Where the cash transactions, cash receipt or cash payment is up to 5% of total receipt, total payment for the year in which you are writing the examination, but in the next year 10%. Tax audit limit is 5 crores or 10 crores as the case may be. Tolerance. Here also 3% is the tolerance. The variation is 3%, whatever price, accept it and go. What is the big revenue we are going to get? Otherwise only we are looking at this. So tolerance is the concept. Tolerance is the concept where 6 entries or more. Okay, then only data set will be constructed. Just read through, we will construct a data set. Okay. Question number 18. Actual theoretically only, I believe we will be questioned in our DTA paper 7, because more of paper 6 question this is. Paper 6, if you have opted for international taxation, they are asking, they might ask, but for our this, it will be only theory question. But why? Not a very big method, for your knowledge. Actual transaction value 150. ALP under different methods are 162, 158, 136, 145, 170, 152, 154. More than 6. So, range method. Dataset method. There are more than 6 prices available. So I should go by data set. Okay. Construction of data set ascending order. Okay. Remember, serial number column is very important. First value is 136. Yeah, 136. Then 145. I changed the 136, 145, 152, 154, 152, 154, 152, 154, 158, 162, 158, 162, 170. 1 minute, friends. I'll change the column, please. Okay. Okay. It is 1, 2, 3, 4, 5, 6, 7. This is the data set. Minimum 7 into 35%. Minimum 7 into 35%. For example, my dear friends, 7 into 35% comes to 2.45. Hence, the third value to be taken. Hence, the third value to be taken. Minimum is 35%. 7 numbers are there. 7 into 35% is not a whole number. So, the third value to be taken, the third value is 152. The third value is the minimum 152. We're using some other color. Okay, 152. Maximum 7 into 65%. Range, the concept says range should be 35 to 65. Okay, 7 into 65%. When I take 7 into 65%, okay, when I take 7 into 65%, I get 4.55. Hence, the fifth value to be taken. Hence, the fifth value to be taken, that is 158. Actual transaction value, we all know actual transaction value is 150, which is not falling between 35 and 65 percentile, which is not falling between 35 and 65 percentage. Actual transaction value is not falling between 30 minimum to maximum range. It is not falling between 35 to 65. So what is the theory saying? If the price is outside the range, then take the mid value. Then take the mid value. Median 7 into 50%. Okay, 7 into 50%. Median is nothing but the average middle value. 7 into 50%, which is 3.50. Hence, fourth value will be taken. Hence, the fourth value will be taken. Okay, hence the fourth value will be taken. That is 154. That is 154. Therefore, ALP will be 154. Therefore, sorry, 154. Difference between ALP, that is 154, and actual transaction value 150 is 4. Difference is between 154 and actual transaction value is 4. Difference as a percentage, 4 divided by 150 as a percentage. Okay, 4 divided by 150 as a percentage is 2.67. 2.67 percentage. Okay, 2.67 difference. Okay, since the variation is less than 3%, 150 will be accepted as the ALP. Remember, let me be going slow. If you have lost the way in between, I will go slow again. I will read the theory once and come. Okay, arrange the data set, take the 35th and 65th value. Okay, and if it is within the 35th or 65th, take 150 itself. If it is outside, take the mid value. However, if the variation between ALP determined, in our case 154, and the price at which it is transacted 150 does not exceed 3%, then what is there? 150, 154, what is there? Take 150 itself. Why do you propose? Patiently note down. I think Saurav, it will itself get corrected. Very sometimes that lag, neither I can note it down. Sometimes it goes beyond my view, but I think it will itself get corrected so far. Take the arrange the data set in an ascending order. Take the 35th. Take the 65th. If the actual transaction value is falling with it, accept it. Otherwise, take the middle value. If the difference between actual transaction value and the ALP determined is less than 3%, I accept it and go. No, don't make any correction. ALP under different methods. 92, 95, 100, 103, 107, 111, 119, 120, 21, 25, 27, 30, 32, 35, 39, 42, 44, 45, 50, 152. It itself is in ascending order. It itself is in ascending order. By itself, it is in ascending order. Okay. Determine ALP when the transaction value is 117. Okay. Will your answer differ if the transaction value is 121 instead of 117? Fine. First, how many items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 14, 15, 16, 17, 18, 19, 20 items are there. 20 values are there. The question is given in ascending order. The number of values exceed 6. Totally, there are 20 different values. All of us need to understand something. So, minimum range 20 into 35%. 20 into 35%. 7. All of us understand. This is statistics, not for you and me, for statistician, how to compute median if it is a whole number. If it is a fractional number, I will take the immediate test. Okay? Where it is a whole number, then take that value plus next value divided by 2. Average of 7 and 8 I should take. Average of 7 and 8. In the question, 1, 2, 3, 4, 5, 6, 7. 119 plus 120 divided by 2. Okay. 119 plus 120, okay, divided by 2. 119 plus 120 divided by 2. Maximum range 20 into 65%. 20 into 65%. Okay, where it is a whole number, then take then take that value plus next value divided by 2. Average of 13 and 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 132 plus 135, 132 plus 135 divided by 2. 132 plus 135 divided by 2. Minimum is 119.5, maximum is 133. Actual transaction value is 117. Actual transaction value is 117. Actual value is outside the range. Actual value is falling outside the range. Hence, median has to be considered. What is median? Median, okay, is 20 into 50%, that is 10. Since it is a whole number, take that number plus next number by 2. Okay, take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 125 plus 127 divided by 2. 125 plus 127 divided by 2. Okay, 126. If you want, you can check. Difference is 9. Difference as a percentage is 9 by 117. It's high. So, since the ALP is more than the tolerance limit, ALP shall be 126. ALP shall be 126. Up to 3% only acceptable. More than 7% is there, so not acceptable. So ALP will be what, not the transaction value, but only what has been computed. Not the transaction value, but only what has been computed. Part B, minimum value, we all know 119.50. Okay, minimum value, we all know 119.50. Maximum value, again 133.50. Maximum value is also 133. Okay, transaction value, they have said 121. The question says, what if the actual transaction value is 121? Okay, since PV is within the range of 35 to 65%, transaction value will become ALP. So 121 will become ALP. Okay, friends. Okay, right? So whenever, can I sum up? Whenever there are more than 6 values, take the data set method. Whenever there is less than 6 values, this is applicable when the appropriate method is RSM, CPM, and TNMM. Obviously, I don't have profit split method as a popular. Okay, okay, they will be taken immediately 2 financial years and the preceding current year. Then the most appropriate method is determined, will be the price determined under the weighted average. This is applicable when it is less than 6. When it is less than 6, these are all the methods of pricing, assigning weights. Okay, resale price method, cost plus method, other things. Okay, why I am saying this is probably if there is a MCQ for you to answer. Otherwise, I don't think practical question they are asking. Okay, always weighted average of the price will be used whenever it is CPM, RSM, TNMM, and the data of the financial year, current year, past years, however you take, and it results in more ALP not equal to 6, 1, 2 to 5. Then assign weights and see. Assign weights and see. Okay, okay. We'll end the class here today. My intention was to go up to secondary adjustment, but not an issue. It's a long area, questionable area. So let's start fresh tomorrow. Okay. Two or three things. Whatever homework questions or whatever things, you just work out and see also once. Second, same way, 9 o'clock tomorrow, we will be able to start. 9 o'clock sharp 9. If you want the Excel sheet, I can post it. I leave it to you. You can text me. If you want it, I will give it in a drive link or I will directly send it to you. I don't have a problem. Fourth, is a small request to you that whoever has attended, please during the next 1 or 2 hours before, send me a small feedback, okay, of the various aspects or any difficulty you face, etc., so that accordingly I can adjust. From